Hey everybody. So Nathan Turner, Dave Putz here. As you know, we're always looking to learn things and we always bring on guests that know more than we do so that we can learn some stuff. So I'm really excited for our guest this time. We've got Dave Pollio. He's been around in the note business for a long time and he's hit up all kinds of really cool topics, talking about looking past, looking, back over 2025 and seeing what has happened, different trends. So he talks about things like market activity, transaction volume, just seeing what that's like. What else, Dave?
Yeah, we talk about buyer education and what market's been doing, and buyers getting better, and what the market's been doing on the brokering side of notes. What he's seeing more this year was seller finance notes on that broker
Yeah.
and hard money loan trend. It was really unique to see his experience as a note broker in that world of servicing. So
Yeah.
2026, he's excited for, but he has some
Yeah.
caution things. So tune in for
As
the
always, we get that last prediction of see what's going to happen next year, and Dave Polio has got some really interesting thoughts. So
yeah.
make sure to tune in.
Tune in, guys. We'll see you guys soon. Welcome back to another Real Estate Note Show. I'm your host, Dave Putz from JKB Holdings. Alongside me, as always, Mr. Nathan Turner.
Hey there.
Hey, we're coming close to Christmas now. Holidays are coming amongst us. Things are
Here we
kind of
go.
getting cold as anything. I'm sure your snowboarding is getting more and more fun.
It's
Your
fantastic.
skiing is
Yep.
going well. Um, and this is the time of year, the fourth quarter's winding down. Deals are happening. I
Hmm.
know that we're been approached last couple of weeks asking us to close a deal here. Can you do this? And funds are closing. And for seller finance people, this is a time where you just fine tune your skills and
Yeah.
get better at what you do and learn. This is you know, that time of year. What do you see? What's your experience and what's your wintertime rhythm?
Yeah. It's the same kind of thing. It's interesting when just over the years looking at it and you see, you know, middle of November to about the middle of December is relatively slow. And then those last couple of weeks, it's just like bang, bang, bang. There's all these deals. And it's like, okay, everybody get it done. And you're trying to get, whatever deals done just before the end of the year. Um, January, for whatever reason, for me has always been kind of a slower month. And then it picks up after that, but I'm hoping to change that. We'll see what we can do. I've
Yeah,
got some other deals in the pipeline that look like January closings, so
absolutely.
we'll
We
see.
don't want to remiss the fact that make sure you start getting your tickets for the DME, which will be happening in May. And
Coming up, pretty exciting.
we'll announce more details of that as we come along the show, and special guests and what we talk about. It will be different from last year, so get your tickets if you're new here. That conference is all about learning how to do the note investing side as well as seller finance, creative
Yeah.
financing, and AI. So it's gonna be a lot of fun. Nathan's putting on. He does a great job
Yeah.
down in Nashville.
We've got some really cool topics coming up. We've got some really cool speakers that have already jumped on board, which is awesome. And it's going to be a great one. We'll more details later. I don't want to
Yeah,
spoil it yet, but
absolutely.
it's coming and yeah, it's going to be a good show.
Absolutely. And we'll be launching, me and Nathan are both putting out our own books, so keep an eye out for that.
Yeah.
And we have a bunch of stuff on our website. Feel free to take a look at that. I got a bunch of stuff new that's coming on the website, my JKP Holdings. Nathan puts out a great email every week. Feel free to take a look at that and just ask questions, respond. And Nathan's
Yeah.
awesome, good. Nathan, it's weird. We just had our last show with Melody, and she broke some really crazy ideas out.
Yeah.
Springtime's gonna be very unique this year. Um, but we've also talked about how defaults are happening and things are just starting to kind of break, and people aren't able to get loans anymore, and things just
Hmm.
shaking up, right?
Yeah. And we're looking and seeing, as you look back over the past year, it's been a really interesting year. We had a new president come in at the beginning of the year, all kinds of uncertainty, all kinds of changes going on. It doesn't matter what side of the aisle you're on.
Yep.
That's the fact. All kinds of different changes and things. And it's really made some interesting situations in the market where we're looking at different things and some positive, some negative,
Yeah.
but just change. And it's interesting to see how it's shaping up. So I'm excited for a guest today to talk a little bit more about that and
Absolutely.
see what he's been seeing as well.
It's amazing when we talk about this stuff. The market's changed since we got started. For those who don't know, me and Nathan's been in the space for over 15 years. This is a
Hmm.
unique time. Things back when we got started were really different than they are today, but we're starting to see some similarities of what we got
Yeah.
started. And we hear from our friends in this creative finance, seller finance world. And if you are part of that industry, put your comment below and make sure you reach out to us and tell us what you're seeing from your side. But we're seeing some weird things happening in that space too with the wrap notes, double digit defaults there. So if you are creating a wrap,
Mhm.
be extremely careful that you have enough capital to carry that sub two first lien and whatnot. Nathan, what's your opinion on the fact of we're seeing, or in your portfolio of notes, are you seeing things change with your borrowers? Are they staying the same? Because most people are still saying, "Hey, everything's performing still." Are you seeing similar?
Similar. I haven't seen a ton of change, a little bit, and it's enough to make me take notice and go, "Huh, that's interesting." We had well, I think we're going to get into this a little bit later, but I've started buying short-term loans, just 12-month loans. Had one of those that defaulted this year, which was
Ooh,
interesting, and all works out. The person we bought from, they guarantee the payments and everything, so I'm feel very safe and secure on that.
well,
However, it's a thing, and that's starting to happen, and I'm starting to look at that and evaluating, how much I want to continue on with these short-term notes. I really like them. I think there's a lot of potential there, but
yeah.
I got to be careful.
Well, I think 2025 was all about hard money loans. That's everything we see.
Yeah.
So, well, without further ado, let's bring on Dave Polio. Dave, thank you for joining us today. I think this is the third or fourth year you've been on. Um, if you don't know Dave by now, please look up SN Servicing. Dave Polio's been around almost as long as me and Nathan been alive, I think, if we do the years. Polio is a wealth of knowledge, wealth of experience. He has a tremendous background, and I'll put that in the show notes stuff. But let's dive right into it, Dave. Just right now, quick thing: what's your position, and how do most people reach out to you and learn about you in the scheme of things? Where do you work at, and what's your role there?
Well, it's great to see you guys again, and always appreciate to be on the podcast with you guys. It seems like it's always right before Christmas time, so I don't know if I'm father time, but I guess that would be doing this for 30 plus years would make sense.
Yeah.
So I head up the acquisitions and trading group for SN Servicing Corporation. So on the acquisition side, we're out there buying residential, commercial, defaulted RPL portfolios throughout the country, and we have ever since
Mhm.
1987.
Mhm.
The servicing company was set up to service all of the portfolios that we were buying throughout all those years, and also to help us work on servicing our securitizations that we were doing about four a year back then. The trading desk, which is really the probably new, it's only 12 years old, but it was really set up at a time where we put a stop on our buy side and wanted to match up all the deals that we kept getting with the new clients that we were servicing for. So we thought it was a nice way to say, listen, if we're going to service for you and you don't have an acquisitions group on your team, we can do it for you.
Mm,
And so that worked out really well and still has. I mean, to this day, we have about 200 and 210 clients that we service for.
Mhm.
And there's probably about 45 to 50,000 loans on our platform. And throughout the year, probably 65% of them will take their loans that we're servicing and ask us to put them on the trading desk
mm.
to sell them. And so it kind of works out really well because we know the assets. If we loaded them onto our platform, we know they're clean assets. And it's a simple 2-second put in the account numbers, and we have a full data tape and a sale tape ready to go. And so if anyone's interested and that's not on my distribution list, all you have to do is send me an email to D Polio, which is Pollio at snsc.com. And once I get your information, you'll just get back a link for the NDA, and that's all that's needed.
Yeah, and if you did
And
miss
then if
that,
there
we're gonna put
was,
that in the show
yeah.
notes too, guys. You'll get all the information for Dave and where he works at. So if you did miss that, don't worry about that. Um, so
And also, if anyone's looking for information on the servicing side, the same route, just
so
emailing. Yep.
For
servicing
sure.
side, SN Servicing. If you're a newer investor, SN Servicing is one of the best out there for it. It does everything you need it to do. It'll handle everything. It won't make decisions for you. That's not their role, but they handle from acquisition to foreclosure to REO, the whole gamut, which there isn't too many servicers out there that will do that whole facet. Most of the
Yeah, very
services
high
we
touch.
know is
Yeah.
it stops at foreclosure. That's all they do. They don't even continue. So that's one thing. And if you're newer and don't understand the attorney talk words, they do play the in between game of saying, okay, this is what they said. And they kind of can sometimes explain to you what it means or ask you some questions to follow up. So it's a really great servicer. The high touch, if you need it, is perfect.
And
Yeah.
for one loan, if
Yeah.
you just have one
Yeah.
asset.
Yeah.
Yep. So it's not for
Hey,
the big boys only.
I'm
Right.
curious, Dave, so you say you got 45, 50,000 loans on there. Out of that number today, and this is going to be different than 10, 15 years ago, how many of those are non-institutional paper, like not created by a bank? Do you happen to know?
Guesstimate.
So give me an example where you considered that would fall into a non-bank loan. You mean a seller finance?
Yeah, seller finance
Um,
or
does a contract with deed count for you for
yeah,
that?
yeah.
10%.
Was that all? Okay,
Oh yeah,
interesting.
very small. Yeah,
Okay.
yeah.
Interesting. I know the reason I ask is I know we get that question from Melody all the time, like how many of these are non-bank loans? And I'm like, I have no idea.
Yeah.
Yeah,
But
I
that
mean,
gives
because
us
we've
some
got a
idea.
couple clients that have, 10,000 plus each, and
Sure.
they're all bank loans.
Yep.
Yeah. Okay.
Absolutely. So when you put these asset lists out, um, it goes to everyone in your portfolio. Everyone gets them. There's no hot, someone gets it earlier than anyone else. Those go out to everyone. And you have typically how long does someone have to make an offer?
They have about 5 to 7 days to make an offer on that. And, as always, if an extra day is needed because someone's away or someone has a question that they didn't get answered, we allow that.
Yeah.
So it's
Mhm.
it's not a firm bid date of 5 days on at 3 o'clock. And if no bids after that, we don't accept it. We try to keep it as flexible as possible.
If
And
someone,
and you're right. Everyone gets exact same tape, apples to apples. There
Yeah.
is no,
Yeah.
you know,
yeah,
And for those who are maybe less familiar, 5 to 7 days, that's plenty of time to do your homework on, especially if you're only looking at a couple of loans. That is tons of time to be able to
just
to go through
put
and
an
do
remember
that.
indicative, yeah, an indicative bid. That's an
exactly.
Yeah,
indicative bid.
exactly. Yeah.
What indicative means, guys out there who don't know what that means, is that you're just doing preliminary. You look at the note numbers, you can get a value of the property, just a guesstimate, and you can make a bid based on the note data and your value of your property. After that, you can
Mhm.
dive deeper, get your BPOs or in your title reports, we call O&Es, and dive deeper into the collateral. It's just based on, figuring out what you think the value is. Now, if someone has a portfolio of hard money loans or seller finance notes, is that something you'd be willing to sell off?
Absolutely. And we have in the last 12 months, we've actually had an uptick of that type of a product.
Hmm. That's really interesting. And we were talking about it a little bit before. I'm a fan of these short-term loans because I'm buying for my fund. It's a pretty predictable way. I know exactly when it's going to close, so then I can go out and turn that money around, which is its own problem, but it gives me a timeline and it helps me to plan. So I'm
And
a
it's a
I'm a
gamut.
fan.
Yeah, we have fix and flip loans
Hmm.
that sell for maybe even par
Hmm.
plus, and then we have some seller finance loans that were probably originated in the last 6 to 12 months that are
Hmm.
selling for almost a 20-25% discount. So it's
Wow.
all over the board,
Yeah.
all over the
Wow.
board.
The
Yeah.
seller finance guys out there who are looking to liquidate their assets, you can also reach out to Polio to ask him, hey, listen, I'd like to sell these assets. And I would give you a little quick thing. He's going to ask you some questions that you may not know the answers of, and you should. So it's a good kind of test to figure out what's important, what's not. Because Nathan and I always come across these people who tell us data that doesn't really apply.
Mm.
Just example, the other day, I had someone come out to me and told me how many acres the property was, which was wonderful and great. They told me, well, three different trees that were actually on the grounds. That really doesn't matter to me, but I appreciate the details. So
Hmm.
you'll get a good idea of where how notes are traded because we find over the years that our clients they don't know how notes are traded often. So for those who are seller financing notes and stuff like that, can they also go to your platform, sell notes, but also service them as well? Correct?
Yes, yep, we do service for the seller finance buyers out there right now. Yeah.
Awesome.
Yeah.
Not
So
not a big part of our portfolio, but we do. We have
okay,
about maybe I think about 8 or 10 clients.
okay. So let's dive into the deep details. What has the 2025 year been for you guys at the train desk? You guys see probably more assets than anyone out there from a seller's point of view and as a buyer's point of view. What do you see from the sellers? What were they selling at typically? Were they moving things quickly? Were they hesitant? Were they holding back? What's your synopsis of what happened?
Well, for 25, it absolutely was probably the least amount of transactions that we had done in 12 years.
Hmm.
It was probably actually not half, but it was probably around 60% of what we typically do. And the biggest reason I'm pretty sure is that we didn't have any of the hedge funds that really to move some big portfolios, which we had previous years all the time. And what we did have that was more than in the past is a lot smaller deals. So we had more transactions, but the loan count was far less than it had always been. Um, and it was interesting how a lot of the deals were coming from smaller funds, smaller buyers that, you know, I don't think they're saying it, but they were getting out. They were basically
Hmm.
saying, I'm done. I want to just move these last 10, 12 out of my fund. I need to close the fund. The investors want us to close the fund at this time right now. So we had a lot of transactions like that.
Mm,
And yes, the motivation on those definitely is a transaction where the pricing gets done. So we do a lot of trades that do get done on that type of a process where we still have some hedge funds that just got into buying. A good example is the Heckams. And
mm.
so,
Real quick. For those who
they're
don't know what Heckams are, reverse mortgages for the layman terms.
yeah, it's almost considered the next closest to an REO.
Hmm.
And so you're not buying the ability to collect from any borrowers. You're working that to the point where it's a foreclosure and a take back of the property. And so really you got to be an REO property management manager person, not a note buyer. And
Yeah.
so that's where we've seen the most transactions that get a lot of bids, but there's a big spread between where they can sell them. And of course, that's probably because it was during the time where they were buying them aggressively from the HUD deals.
Yeah, I know how deals taking place this month as well. There's a big trade going on that people are bidding on that we're part of. Um, and Heckams are going to be growing year after year, I believe, due to the fact that the baby boomers are retiring and passing away. I think that's going to be more and more common because reverse mortgages is just it sounds it is what it sounds like, right?
Mm.
It's just taking the mortgage, giving you money every month, and adding up. And default is when you sell or if you die. The only
Hmm.
tricky part is if there's heirs or if there's a spouse living that's not on the document, you have to evict as well. But so let's flip over the
That,
buyer's side. Go ahead, go ahead. Sorry.
yeah, we had a lot more I'll say we had a lot more RPL sales than MPLs.
Okay.
Yeah.
Okay.
Hmm. Is it because
That's
MPLs were
interesting.
too expensive for the sellers to sell at a deeper discount? You think?
The NPL had the valuation balance
Um.
dilemma.
Okay.
The values have gone up so high, legal balances have gone up with it, and they all project to recover the full legal balance, and that's where you're going to have the biggest um, the bid ask spread on those. And with the RPLs, they were most of the assets, of course, were NPLs a few years ago
Mhm.
Hmm.
and they have the ability to sell them anywhere from low 80s to the mid 90s, which
Gotcha.
move them pretty quickly.
So let's
Yeah.
dive into that side of it. We were talking before we got on the call. There's a lot of investors out there on social media that sees Nathan put it out there. I just bought loans. I just bought loans. And the eagerness to buy loans is out there. And we're competitive to a point, but I think we run into is we start chasing who gets the best returns. And we often find the fact that that really should not matter. It's what works for you and your business, right?
Hmm.
If I'm buying an X yield, Nathan doesn't have to be higher than me to make a better deal. It depends on his scenario. If his money, if he's borrowing money at a cheaper rate, he can get a cheaper deal. But for those person who's just getting into the game and sees all these social media posts of all these, quote unquote experts out there who are buying 5, 10, 15 deals, what do you say to them when they're first time buyer on buying the first deal?
Yeah, and also understand how the information is coming from what source. So if you had
Yeah.
asked me to teach people to buy loans, I'm going to go back to, years ago where we were buying and making 40 to 50, 40 to 45% profit on our
Yeah.
loans, on our yields.
Yeah.
So that's what it was back then. And of course I'm going to pitch that. I'm not going to tell my pitch, I made 5%. So you got to figure out where's this information coming from,
Yeah.
because that market is long gone. There is
Mhm.
no there is no market where people are buying assets steadily and making anything higher than probably an 18% return right
I would
now.
agree with that.
Yep.
And so
Yeah.
that's where you see a lot of people looking for that above that 18 that have been on the sideline for
Yeah.
many years. And so, you know, as I said to you before, to me, anything above 8% is really a comfortable level
So we
of a
have
yield right
we
now.
have a normal person in their
Yeah.
30s and 40s who have some capital. They've heard about this note stuff. They watch our show or how they learned. And they want to get started, right? They want to buy their first asset. And they ask all their friends, what yield are you getting? What yield? What do you say to that person who's asking, what yield should I get? Who just needs to learn and buy that first asset? What do you tell them?
Well, I guess not to be bogged down on the yield itself, is to probably be more interested in the process.
Hmm.
Because if you're an elephant hunter, you're going to find one, and down the road in the future, you're not going to be, a consistent buyer. So if you're able to get your feet wet now, and forget about the yield, I mean, don't be silly about it. Be comfortable with a little above a break even yield and move through the process where down the road you're going to be more educated, more willing to make larger purchases because you now have the experience where others have been out of the market for 5+ years.
Yeah, I remember we talked
So,
to somebody who, I think it was just right, maybe it had been at DME anyway. But he said he had just bought this one loan and he was kind of embarrassed about it. He said, I just bought this one. It's like a 6% yield. And we're like, are you kidding? That's fantastic.
Yeah.
Like now
right.
you've done it.
Yeah.
Now you know how to go through the process. Now you've learned about servicing and how that works and all those different things that you don't know until you actually do it. You can hear about it, but you don't know until you actually
And
do it.
Nathan and I talk about all the time. Beat what your market is giving you. If your market, your money's in a 6% CD or 5% CD, if you get 7, you just beat your own money. So
Yeah.
just take away that skinny, and you've also not lost any money, which is a really big win because in this game you can lose money. Let's be honest here,
Yeah.
right? We've seen
Mhm.
stuff happen and it's not fun. So
Yeah.
experience beats everything. We talk about it all the time. I don't care how many deals you've done. The time you've been into it is the big key because you're going to learn and learn some hard lessons as well. Just start learning. Buy a deal
Mhm.
at 7, 8%. Don't chase the big dogs. Buy from a reputable seller. Make sure you do your due diligence well. Ask questions and buy that first deal. Nathan and I can't compete with you if you're buying at 7, 8%. That's
No.
okay. Take
Yeah.
8% and be happy, right? So I would really push you guys if you're a first time buyer or even a no creator and is looking to switch over to the buying side, do that, right? Try
Yeah.
buying it and learn from the other side of it.
And
Yeah.
understand that, as buyers, we're buying bulk deals. And so yes, we're hitting home runs on a lot of assets and we're losing our shirts on others. So
Yeah.
for us, it's a, we can hide it with the profits where if you're buying one loan at a time, I could see where that, that's a difficult position, a different view for that one single asset. So understand if someone's telling you that, they're hitting home runs, they're probably have a portfolio, larger than two assets.
Yeah, yeah.
Yeah. Yeah. Yeah.
So, what in your experience now with buyers and stuff that's going on, what's your biggest issues or problems that you're seeing from the buyer side, as well as those who are creating or selling notes? What is your in 2025? What lessons did you learn that you want to share with everyone about how not to be a how do you become a better buyer and how do you become a better seller?
This year was pretty, I was impressed with this year because buyers, investors were more in tune with how to run through the due diligence. So
Mm, good.
I saw a lot more people working through the files, educated questions, running their own third-party BPOs, O&Es, and coming back with issues that the seller was understanding and willing to work with. If anything, I saw on the seller side more issues where the collateral descriptions were different from what they have on the tape, and
Mhm.
also for the collateral documentation of what they actually had for someone to go through a funding and closing on it. So this was the first year where there was more issues on the seller side than I had issues on the buyer side. So I think if buyers continue to do their work. If they're going to put an offer in and get awarded, is to put in the time and ask the questions and don't run away if they find out that the property is, 50,000 less than what was on the tape. Understand that you can negotiate and
Yeah.
bring it to everyone's attention. So
And
a lot less ghosting this year.
good. So to that point, I've seen it in the past, and I'll get your take on this, but I've seen in the past where sometimes sellers will put out something, and then I've gone and do my due diligence, and I say, look, these are some of the issues that I've come across in my due diligence. Um, my genuine feeling is it's not the seller trying to like pull one over. It's they've got this big pool and something has changed over time. They were not aware of those issues. I don't generally speaking, I don't think it's the seller's like, oh, let's see if we can squeak this one past kind of thing.
No, I agree.
Yeah.
I
So
agree.
it's you're not, generally speaking, again, this is a relationship business. So the seller's not trying to pull one over because then nobody's going to buy from them ever again. And they know
Right.
that. And
Yeah.
so it's just you found something and because whatever, something happened over time, all of a sudden a lien was put on the property that they weren't aware of. And you found it because you ran an O&E and they hadn't for the last 12 months or something like that. So
So, with that said,
putting that out there.
how is one a bad buyer? What's it? What is? How would you define a bad buyer? Um, what's that look like? Because some people out there are
Uh,
afraid to make offers because they're afraid to be bad buyers. So, how do they prevent themselves or reassure that they're actually not bad buyers? They're just being cautious.
well, I guess not, I don't fully understand that. As a bad buyer is someone's trying to do something that, clearly is that they should not be doing, other to the point where someone is not willing to make an offer because they don't have all the information or they're afraid to win the deal. So,
Yeah.
um,
I think
what
winning
do
the
you
deal is a
consider?
scary thing for a lot of people, and I think that's just education, experience. And Nathan and I run an advanced class if they're interested to learn about due diligence and how to get over that. I would define bad buyer as someone that they make an offer and then ghost you. That's totally a bad buyer. Another one is when they take it and they try brokering it to somebody else, and then they try to play in
Correct.
between, right?
Yep.
Or lastly, a quote unquote bad buyer, and this is more of a middle ground, is where I bid on 5 assets and I only have 100 grand, but I bid on 500,000 and I don't tell you, right? I think that's, I wouldn't say it's a bad buyer. I just would say remember to let the seller know that this is how much money I have, but I want to bid on all five in case I don't win one or two of these. These are all the assets I'm looking at. That's what I mean by a bad buyer. Would you
Okay. Yeah,
agree?
yeah, I mean, on the opposite side, the other side of that is just is to be as upfront as possible,
Yeah.
because the more upfront you are, that relationship will go further than someone that is just going to bid assets, nilly-willy and, don't have the funds for it.
Yeah.
And to get to the point where if you have someone that is um, um, the risk tolerance is extremely low and doesn't want to make an offer, they can always, as I said before, at least put an offer in and let me know that it's a shadow bid. And if I know it's a
Yeah.
shadow bid, I'm not going to present that to the client. I'm just going to keep it in the result file and then go back to them and say, listen, here's where your offer was compared to 8 other people that bid.
What does shadow
Yeah.
bid for those who don't know?
So it's someone that is interested in learning the process of buying these assets, doesn't want to really put their foot out and say, I want to pay 100,000 for this loan because they're not quite sure if that's the right number or if they're viewing it right. So they could go to me and say, listen, I don't want this to be, a live offer. Make it a shadow bid. Here's my $100,000 bid. When all the bids come in, let me know where I stand. And, maybe there's a reason why people were at 200,000 or
Mhm.
everybody was at 50,000. So
Yeah.
at least I can let them know that, you're a bit of 100, you would have won the deal, but you were 50,000 over the highest bid. And
Yeah.
here's the reason why.
I
You
think,
forgot
guys,
that.
if you're
Yeah.
not
That's
doing this,
fantastic.
that's an
Hmm.
uh, that's a lot of time on you, man. But that's an awesome feature you guys have because a lot of people are afraid to make offers and they're either afraid of being, paying overpriced because they don't know what they're doing, or
Yeah.
really undercutting, going, "Oh my god, I don't know, is this too low?" Right? They might make an offer of a 25 yield, way too low, right? So those are the kind of things to be knowing the fact that the
Yeah.
seller, the person who won it, was 75 grand above you, or you would have won it, but just beware of what's happening. Hey,
Yeah.
you never
I
know.
want more buyers.
Yes. Let the seller say
Yeah.
no, right? They're not going to be offended by stuff. They just,
No.
you're just a number to them, right? If the asset's worth $1 million, you made 100 grand, it's going to be passed and moved on, right? Just move on from it. Just get a feel for it. Just don't lowball. If you're making one offer and trying it out, that's fine. Just don't make a pool of, 50 assets and bid 20 lowballs. Just don't do that.
Yeah.
That makes a bad relationship. But I think it's a great offer, guys and girls out there, to make that shadow bid. So it's a really cool thing. With
Yeah,
that
that is
said,
cool.
do you also do the same thing for seller finance people who don't know anything about selling a note? I mean, most of those guys out there think we bid at a percentage of value of property. Do you
Um,
help them in that process of saying this is where you're probably going to be at for sales?
yeah. Yeah, we definitely do a free analysis. Absolutely. And I could take past results on other seller finance deals, or if we even put it out into the trading desk and just to get the offers that come in, because at the end of the day, the seller has the final word. So
Sure.
that seller will get all the bids and a bid result and has the final word saying, you know what, we're not interested. We're not interested in selling these assets right now.
And guys,
And with that,
yeah,
whoever's putting in those bids, they're if it's say for example, it's $100,000, that's what they're putting it up for sale at. And if everyone's coming in at 75 or 65, they're going to put in why. They're going to have the reason. Well, this is
Right.
I'm going to go 75 or 60 or whatever it is because ABC, and they're going to outline the reasons. So it'll give the seller an idea of like, oh, okay, so in the future, this is what I
Right.
need to fix when
Yep.
I'm creating new loans.
yeah,
Yep.
awesome. And guys and girls out there, if you are looking at this kind of stuff, um, you can pick your servicer afterwards. If you win the bid the first time, you don't have to have that servicer right up front. It's always an advantage to do that. If you win a bid, that's probably the most exciting, scary time in the moment. That's when you reach out to people that are experienced, like Nathan and I, and
Mm.
even pull you and say, "Listen, what are my
Yep.
next step here?" Right? Talk
Yeah.
to your servicers, talk to your attorneys, and start reviewing the collateral and diving deep into stuff. And then you can
Mhm.
always say, "Listen, I want my servicer to be SN Servicing," and then loan could transfer them. And if you don't need the high touch after a while, you can transfer out. It's not stuck. at that servicer.
And you don't need to use us all right on the at all. I mean,
Yeah.
you don't have to. We don't do the trades saying that you have to use us as a servicer ever.
I would tell you
Right.
that most likely the biggest issue borrowers have is when you change servicers. So just be caution with that
Yeah.
process. They just don't know where to make payments, right?
It
So
gets confusing for them.
yes,
Yep.
yes. So we've gone through what sellers should be learning. We've gone through what buyers should be doing, right? If we, we're not going back to 2011 when we're buying at 40 cents. Not going to be there. But when we
Yeah.
look at the fact that when things are adjusting, we're seeing more hard money loans. We're seeing more seller finance notes happening. We're not seeing as much institutional, loans being given out because the yield, the interest rates being so low, it's harder to buy those loans. Um, what are most sellers doing now? Are they holding loans and keeping them, or are they trying to sell off? From your experience with them?
The sell-off I've seen are the mortgages that have the I'll say 2 to 3% rates.
Hmm.
Um, and it's amazing how those trades, and they're coming from originators that originated, wasn't retraded as someone else and so forth and moved around, that they are taking them off their books in the 70s,
Really?
and it's just
Hmm.
and that's a hard loan for many people to buy still.
Hmm.
Yes,
They are not looking, they're looking at the 2.5%
we're
rate,
passing.
at a 30% discount, it probably gets you close to, I don't know, 5 or 6 maybe,
It's not
but
enough, but
Hmm.
yeah,
it's still not enough for that.
yeah,
And
Yeah.
so we've seen a lot of that in the market. On the seller finance, I'm seeing the trades where it's um, it's coming from companies that um, just want to move the cash in and out because the product is growing. And so
Hmm.
their warehouse lines are saying, great, it's great that you've got this product growing, but you need to move these off the warehouse line to
yep,
bring in more loans. And
yep.
so in that type of business, it's easy for them because it's really just a point game. It's
Yep.
not even holding the loans, it's how many times you can
Turn the money over.
revolve that money around
Yes.
And
to
you
get the
you were
points.
saying that you've seen an increase in the seller finance this year?
Yes, we definitely have. Yep.
It's really interesting.
Yep.
The lines with everything were one of the questions I put on social media recently was, I'm curious how many, you know, seller finance properties were sold. Seller finance increased over last year. I'm curious where that's
Hmm.
at.
We'll
Uh,
we'll get with Tracy and Fred next year and get
yeah,
their
yeah,
their
The
analysis.
difficult product is the seller finance REOs
yes,
Yeah.
because you can imagine that when everyone had bank loans and they went REO, banks were set up to have property management companies.
yes.
Yeah.
The seller finance groups, they're not doing anything to the properties. So
Yeah,
those
Right.
are the ones you really have to watch and make sure that you have the ability to get inside for those properties.
and most of the seller finance notes are they performing or non-performing? The ones you've sold or got in contact with.
Most of them are performing.
Okay,
Mhm.
Yeah.
wow. I know the
That's
non.
music to my ears. That's what I'm looking for. So that's perfect. But
Yeah, I
yeah,
know.
that's interesting.
I know a lot of the world right now is still performing. Right, we're not tipped at the scales yet. I know a lot of people that are still looking for non-performing notes, and you said it perfectly before. We're no longer in that world of what most of us lived through and we talk about a lot. Non-performing world was 2010 and 2015 was all we saw. I mean, performing note was like three or four of them on a tape, if that.
Mm.
Um, it's flipped. A lot of them now are performing. So, guys, if you look
Hmm.
for non-performing, I get the angle, but I don't think you're gonna get the yield that we were getting, where you bought non-performing and you get a 45, 50% yield, IRR after you foreclose, and because the discount not there yet.
Hmm.
Will eventually, maybe the banks have to be in position to sell the loan off, and I don't think the seller finance people will be doing same structuring that banks did. For writing off the loan against their books and having it free and clear and to be able to sell it and make proceeds. It's not set up the same way. So
Yeah,
So
the
what
NPL
have you
loans
seen?
have such
Go
a
ahead.
long title of different transfers right now. So that's
Yeah.
where, you never used to see that. You'd see one or two transfers. Now you could see as high as, 5 to 6 different transfers on a loan.
Mm, that's interesting. Are you seeing over the past year about delinquencies? What are you seeing with that happening?
So on the servicing side, we have not. We have not seen
We've
any
heard from a
upkick
couple
on the
servicers.
delinquent side.
Yeah.
We definitely have seen an uptick on assets moving out of the servicing platform because they're selling them a lot quicker now.
Mm.
Okay.
Are you guys handling wrap notes? I know on our private call we talk about that a
No,
little bit.
no.
We know why. So those who are doing wrap notes, there is issues with them, but just we won't dive deep into this call. We've had other calls about them, but wrap notes have a different world, and they're defaulting at a higher risk than everything else, and they're often not properly done. So, well,
Is that also they're called DPAs, deposit loans, where um, they're being done at which is like maybe 5 to 8% of the original loan with the first lien just to get the loan, um,
they're doing what they do is just taking over someone else's sub two. They're taking over someone's property, someone else's debt sub two, or
okay,
their own debt, and then they wrap it where the note says
okay,
3-4%, and they wrap it for 9-10. But usually they do it at the same. They they sell that property at the same that the UPB is. So what they run into is the UPB and the property is 300,000. They now sell for 305, and they play a yield game where they're paying a monthly payment to the first lien at 3% interest rate, and they're collecting in 9-10%. What the problem they run into is like landlording, that they if that the second borrower starts defaulting on them, and they have 10 of them, they need to have enough capital to keep paying off that first lien, and typically they don't have that capital um, because of the way they structure
yeah,
their
funny
deals.
because we had someone call me up and they wanted us to see if we could service for them. And I asked him to explain what the product is. And I
Hmm.
I kid you not, 25 minutes later, I said, if it took you this long to explain that type of an asset, there's no way we're going to service the loan.
Yeah,
Yeah.
We are used to a bank made a loan, the borrower
yeah.
defaulted, done.
Yeah. And
Yeah.
there's other
Yeah.
services out there that are more familiar with the seller finance world. We have good friends of ours, we've had them on our show too. So SN Servicing does more of that clean paper, right? It understands it. It's institutional like paper, and I would tell you also we've had like Madison come on. Is servicing will pick apart your paperwork if it's not clean. They will find issues with it, right? We've had where the PITI is fixed. We've had it so the escrow is flipped over, the start date's missing, all kinds of issues on these paper that servicing is going to pick up on that. So if you are seller financing and you go to board your loans with SN, they're going to pick it apart and say you're missing this, this, this. So just be aware that it's not just put paperwork together and let your local real estate attorney put it together for you. It doesn't work that way.
Because we'll get fined.
Yes.
You know?
Yep.
Yeah. It's not just SN being picky. Like there's a
No.
reason for it. You
Yeah,
guys
no,
get
there's a big
audited all the
reason.
time. And
Yeah.
yeah.
Yeah. So
Yeah.
we always talk about on the show, make sure you're underwriting every borrower, make sure you're using RMLOs, make sure the paperwork is done correctly, your
Mhm.
disclosures, things like that. Because loans can always default, right? We talked about our show in our private call that loans used to be recurring every 5 to 7 years. People would sell their property. It's now gone to 10 to 12 years where people are hanging out there for a little bit longer. And there's more chance for default to happen during that period of time.
Mhm.
Could it perform forever? Absolutely. I think my longest performer right now I bought in 2016. We still have it, which is wonderful. I think it maturity is 2031. It will sit around forever. It's really good. It's wonderful. So,
I've never hung on to anything that long.
so Nathan, I'll let you ask your final question. We feel like I have a drum
Yeah.
roll.
I'm always interested in this, and we're both interested in this. But like, you've got all this experience, and you've got like a firsthand view of what's going on in the market, both on the buy sell side and on the servicing side. So you're like the most qualified person. What do you see coming up? What's 2026 look like? Just in terms of the market, notes, all those things.
It's going to be a slow churn. I mean, it
Yeah.
really is. I've I've been on the soapbox for at least 5 to 8 years now,
Hmm.
where I was the number, when they always say 1 to 10, what's it going to be like? 10 being the most active. I've been a three every single year.
Yeah.
So I still believe, yes, there's absolutely opportunities. There's definitely opportunities for buyers to be buying assets.
Hmm.
But it's going to be a lot more competitive because there's going to be a lot less more product unless you start looking at other instruments. So,
Hmm.
on the NPL side, you need to move away from that if you're not finding them in the first quarter and start looking at RPLs, seller finance. If you're interested in contract for deeds or land leases, start looking at those. I don't even see small business commercial. I thought maybe by now you would see small business commercial assets ticking up.
Hmm.
I don't see that still. Um,
Hmm.
I think it's going to be a repeat of last year, and it's going to be a battle um, to kind of picking. If you're really picky and choosy, it's going to be a real battle for you.
How about on
But I
the
think
house value side? What do you think house values will do? Stay
um,
flat,
I
decrease?
No, I think there'll be probably about a 10% decrease,
Okay.
which still is well above where it was pre-COVID.
Hmm.
So I don't see that unless you're looking at assets that were originated in the last probably year and a half. You could have some borrowers that are going to have some issues on those type of assets where they were over the head to start with. Any small default will definitely have an equity issue on those assets.
I agree.
Um,
And
yeah.
Hmm.
interest being
I mean,
higher
you
too.
you you see a lot of properties that are listed for, 2 million plus, and they're dropping, 200, $300,000 where, you never used
Yeah.
to see drops
Yep.
in real estate pricing like that.
Yeah.
Not like that. Yeah.
Absolutely. Well,
Very interesting.
Dave, I appreciate you spending a little bit of time with us. I think we'll
Yeah.
probably have you back on again in the next year to give us a year-end wrap-up for that wonderful Christmas season and holiday season for everyone. Um, I thank you again for coming on and spending time with us and spending and giving us your experience, your knowledge, and everything else, and your time, and also that. So everyone else out there, Nathan and I will be back in a few weeks. We'll be taking a little bit off. But Polio, any final words for everyone out there? We will be sharing his contact information as well. Um, and just be happy buying out there. Be smart. Ask questions. We're going to share his email address. So email him if you have any questions. Nathan, it was a pleasure.
Mhm.
And we will see
Yeah.
everyone after the New Year's.
Yeah.
All righty.
Take care, everyone.
Thanks, guys.
Take care.
Thank you.